Hi there, my name's Miles Pitcher. I own a mortgage company called Superior Lending. We've helped thousands of people get into their first homes. Today, we're talking credit scores to be able to help you get a credit score, improve your credit score so that you can get the best possible loan when it's time for you to buy your first home or refinance or buy a second home and so forth. Let's jump into it. So credit scores matter because these are a way that the lender uses to evaluate you as a borrower and the risk that they're going to take to loan you money. It just shows your history and how well you've managed your money and debts that you have. Obviously, a higher credit score equals better interest rates, better loan terms, more buying power. What is a good credit score? Here's a good chart that shows you that, they say 670, I say 680 plus is good, very good, exceptional. If you're under 680, you should do some things to try to get that score boosted up. And I'll give you some tips here in a minute on how to do that. So you don't have to have perfect credit. On a lot of our loan programs, we can go all the way down to 580, conventional down to 620. And FHA down to 580 is actually still a very, very good loan option. We'd love to see you get up to 620 on that. VA and USDA are good loan options. They don't publish their credit score bottom limits, but generally they're close to what FHA can do, 580 or so. But we have done some even lower than that. So a higher credit score equals a lower interest rate, lower monthly payment. It's a big deal. It can really make a difference in what your monthly payment looks like. It also gives you more flexibility in your loan options that you have with lenders. So this is how you check where you stand. You can get a free credit report from Experian, TransUnion, Equifax, which are the three credit bureaus that we pull from. We pull from all three, and we will use the middle score. Look for inaccuracies on those. Sometimes there can be mistakes. And no, we just don't want there to be surprises when we pull your credit for the first time. Now, there is a difference between bad credit scores and no credit. I call people with no credit scores credit invisible. And I'm going to put up here a little link to a video on how you can become uninvisible, how you can get your first credit score. But if you have a bad credit or low credit score and you'd like some tips on how to repair your credit, no obligation, free tips that I have that go out in a newsletter, text credit repair to that number right there, 385-240-1411. Now, if you don't have a credit score and you're credit invisible, there are still loans available. They're called no FICO scores. You don't get the terms or interest rates that are as good as those that have excellent credit, but loans are still available. I just closed one last week for a great guy who makes great money, but he has never, ever opened a credit card or had any debt ever in his life, so he has no credit score. Now, credit mix, this is important here because there's different types of credit. Your credit cards are going to be revolving debt, lines of credit, cards that you get from like the Gap or Nordstrom's, those are all revolving debt. Those are credit cards. Installment debt are your student loans, auto loans, business loans. Those are installment loans. The difference being revolving means that you can pay it down, draw it back out, pay it down, use it. It's a continual revolving use. Whereas like with a car loan, you get the initial loan and you're constantly just paying it down, but you're not redrawing the money. When you start out, you should first focus on if you have no credit, focus on getting one credit card revolving, then a second one. And then if down the road, you'll get this, what I call the perfect credit mix, which is 2 credit cards, 1 installment loan if you need one on a car or something like that, and then a mortgage. And that's the last piece in the credit mix. That's how you achieve like that 800 plus credit score, is having a really good credit mix with a great history on paying those on time. So most of our loans we do right now, we do soft pulls for our clients. And if you'd like me to do that for you, happy to do that. The only time we do a hard pull is right when they're ready to buy the new home. And so it gives us a snapshot where you're at. It won't affect your score, but it's very, very good to get that soft pull done and see where you're at. So here's another great chart that shows you credit score factors. The two biggest ones affecting your credit score are going to be the amount you owe, and we also call that credit utilization, and your payment history, being on time on your payments. Let me mention the credit utilization. So if you have a credit card with $1,000 limit on it, if you have drawn $900 on that credit card, use $900, you're at 90% utilization. That actually will hurt your score. But if you're 30% or lower, $300 or lower, is going to benefit you. So you always want to keep that utilization 30% or lower, and you want to be on time with your monthly payments. You can see credit mix, length of having the credit history, and having some new credit in there also are factors. Other factors to focus on: payment history, credit utilization we mentioned, and then new credit. So let's take a quick little mention here on the new credit. So if you're in the process of buying a new home, do not go open new credit without talking to your loan officer first. Okay. Any new credit moves you make should happen 6 months prior to your mortgage so that it can settle in and it's there all on your credit report. So here's some quick ways to boost your score: auto pay, making sure your payments are on time. Keep your credit card balances small. We mentioned 30%, 25% is great, always there. You can always ask for a credit limit increase so that your utilization percentage goes down. When you pay your credit cards down to zero, please don't close those. Let's say you've had a credit card for 5 years, no late payments on it, and you go and close that credit card, you lose all that wonderful history that helps boost your credit score. Keep that credit card open. Just keep, buy a tank of gas on it and pay it off. Keep it that way so that you have all that history benefiting your credit scores. Okay, credit score timeline. If you're improving your credit score, the small changes can happen pretty fast, 30, 60 days. But if you need major repair, you have late payments, you have defaults or anything like that, you need to start working on it because it can take some time. But little by little, you can get your score boosted up. If you need some personalized help, we can help you. If you need major repair, we're going to refer you to a credit repair company. We have a couple we like, we trust. They do a very good job. They are not for free. They'll charge you for their service, but they can really, really help you. I've seen credit scores jump big time. So a few tips: make sure you get whether you get a free credit report online or you have me do a soft pull for you, find out where you're at. Okay. Use credit as a tool, build it, get your score up there. Once you have a high credit score, you're in control. You have so many more options. If you have a low credit score, you're going to be absolutely handcuffed on what you can do, if you can do anything at all. So this is all about getting prepped, prepared, and ready to buy a home. Here's how you can reach out to me and my team. Always happy to answer questions and help you out, but I hope those basics on the credit score help you out today. Thanks for watching. Have a great day.